Good evening. We're taking a look at the weekly euro-dollar chart at the moment. We hit our target. We had a target of 114.70, went to 114.63. That's near enough, I feel. And we didn't really make any great shakes on the top side. We closed the week below 115.25, which was our first target. Now, this is going to act as resistance, obviously, for the rest of this week coming. We can see the large topping area you've got here, okay? This is not great. This is something like what we've got on the DAX, although this has taken a much less time to come to form that pattern. You know, the head and shoulder pattern has been taken since about June of this year, so we haven't really taken a long time to form it. And I think this is where the problem is coming, because on the daily you've got a bullish pattern, and on the weekly you have a bearish pattern, and the monthly you have a bearish pattern. So these longer term time frames are really affecting the market at the moment, okay? So as long as you can all see this head and shoulder top, you can see the price is below the 21.55 day moving average, and we closed below the 9.1, which comes in at 15.70. Now we know at 15.70.75 is going to prove quite a bit of a resistance level as well. But let's take a pop and look at the daily chart, see if we can see anything else in there. So this is basically where all the kerfuffle, if you like, the confusion is, because you've got this base pattern over here. You know, and you can't say we haven't got a base pattern, because we actually have got a base pattern. But the point is that unless it breaks through some significant resistance on the top side, you know, the market is in a position where it wants to trade lower. Now, if I click from here over to here, and you can see where that resistance is coming in. It's coming in right at the area that we said would hold euro on the top side. It's coming in at 18.25. So that's the area you've got to clear to get this out of the doldrums. Now, we are oversold, okay? We on the daily and obviously the shorter time frames. So this 14.70, 14.60 is really going to be looking to hold. If it fails, we can dip down to 14.10. We've got a trend line that I've got evident on the weekly chart coming in at 13.01. But this is the key, all right, around this level here. If we cannot hold it, we'll go across with, look, this support here, which is coming in at 14.32. And you've got it again here at 14.29. So we go through 65, 60. That's where we're going to try and head for, and that ties in really with this 78.6 bib. It's difficult. It's difficult when you've got two patterns showing completely different ideas and different views. But you know, the longer term the time frame, the better the pattern is. If we do hold onto here, you're going to see a correction, but a correction only. And if we get above 15.60, we're going to head into some quite good resistance, and that's going to be at 16.03 and at 16.36. Okay, so bear with that, keep that short term as we go into this week's trading session. Just make sure you've got all those levels in your mind, so that if we do have a little pop back over 15.60, you know exactly where your resistance lies and whether or not it's going to hold or it's going to correct more. You'll be able to tell that by the indicators. At the moment, the dailies are below the 0 line on the ROC, but we're looking okay. We didn't get desperately overdone on the RSI, but we did on the stochastics. So we are due for a little bit of a change, which, considering where we've come from, you know, isn't beyond the realms of, it's within the bearish parameters of the weekly chart. You should see a bounce this week, early session, but we'll see what happens. Okay, catch you tomorrow. Bye.